Welcome to the Accendo Traders Group. This is our video trade plan for Thursday, May 22nd, 2008. AccendoTraders.com, effective trade plans delivered daily. Each day we have our routine that we go through to prepare ourselves for the next trading day. We want to make sure we're on the right side of our trades and make sure that nothing happened today that could affect our positions. And as always, we want to make sure that we have time to spend with our families. So today in the market, how about that, huh? We had a day, and on a day that we thought we wouldn't have much going on today, ended up being a whole lot going on today. And it all comes down to the minutes from the FOMC policy. A lot of people weren't expecting a lot to go on here because, everybody knew that they weren't going to be cutting anymore. We got the 25 basis points the last time, but they did change the language. They changed the language to say that, it's unlikely that they're going to ease monetary policy. We knew that, but they changed the language to raise inflation numbers, and they also lowered the GDP growth. I believe a whole percentage point down to anywhere between 0.3% to 1%. So they lowered the GDP growth forecast for the year. We had some news from Time Warner, but again, big news was the FOMC minutes and the change in language. Crude inventory had a decline, and next thing you know, boom, $133 per barrel. I said it before, it is crazy that when you go to the Costco's and down here in Atlanta, Kroger's of the world, and gas is just ridiculous. Just ridiculous. All sectors ended in negative territory. All indexes were down. No real important earnings today. We had some upgrades and downgrades, but again, the theme of today was the FOMC minutes. Tomorrow we have initial claims. We have some earnings before market, not that big though, and we have our split plays that we've been watching at. But the big thing is to see if there will be a follow through. And again, we had resistance at the 200 moving average. We've been pausing there. We've been talking about what was going to be the catalyst to move us one way or the other. And right now we have a catalyst with the change in language, and we'll see if there's going to be any follow through. We know the bears are going to try their best. Let's take a look at our flag list. Okay, as we look at our flag list, again, the most important thing is news overrides everything, and we had news, and that news was of the FOMC changing language, which we've already spoken about. And what I want to do is just show you, first of all, look at this downtrend just over the past 3 days. We hit a top here and have just been going down since. The other thing I want to show you, and again, obviously, some of you may say this is certainly hindsight, but what I want to show you is, do you see how right here we have a bottom, sort of a bounce, and there is such a thing as intraday resistance, intraday support, and that's what we have here. We have an intraday support that was kind of hammered out here on yesterday, and then as today, as we approach this level, what happened again? We bounced. So for those of you, who are watching charts intraday, when we broke this level, especially with this fallen 3 pattern, but when we broke this level, 1408, today, this was a good signal for you to start switching over to bearish trades. If you weren't already in them, to close up your bullish trades, whatever. This was a good signal to say, hey, it's okay to go bearish. We broke this support here. We broke the support early from today, and now we're getting sell off. Some of you again may say this is certainly hindsight, but I just wanted to point that out to you for something for you to watch if you are watching intraday charts. So obviously today, the story has changed. We've got our 3 major indexes. We have failures at new highs on all 3. We all reached the 200 exponential moving average, and we all failed. We failed to make new highs in this recent trend, and you can see with the NASDAQ what happened. We're basically right back to this support level. The Dow has broken a little bit harder, coming back down to the downtrend line, and the S&P 500 is coming right on back down into that also. So certainly the market is weak, and you can see the indicators are showing the same thing. So tomorrow we want to see who's going to step up and take control. The bears are going to try to put their foot on the necks of the bulls, and we'll see. We don't have a lot of news, so we can certainly see if the bears are going to continue to press that sentiment of a downward push. Okay, so again, as I sometimes do, I want to make a plug to get into the podcast version. I have about 2 minutes left here for the YouTube version. And the main thing I want to show you is that, a lot of our stocks obviously pulled back today. Some of them pulled back to support. And we have some, some real good bearish entries coming in tomorrow. Here's Apple at support coming down here. You can see CF breaking out of the, we already had that as a bearish play anyway. CHK coming down to the 20. This is certainly, if it breaks the 20, we want to get into a bearish side on that. CF came down to the 10. The 10's been a good support. We could probably fall down to the 20, maybe get a bounce there. Fizzler also came back over here to the uptrend line, breaking that, probably heading down to the 50. And then our broker stocks all showing weakness. This is what we've been watching for the past couple of days here. USO, obviously oil just unbelievable, so we unflagged that. And X also, I'm leaving X actually still bullish. Basic materials did okay, but crazy wick there. But I'll leave it on for the bullish side. So the theme of today, as far as our remaining stocks, we're for the most part all looking bullish. I'm sorry, bearish. I'm liking AEM to the upside. BTU still like it on the upside, even though we came back here to the to support here at the 5. CF is bearish. CHK is bearish. CLF, I would go bearish at this time. The energy stocks, DVN still holding on to the bullish side, and again X still holding on to the bullish side. So at this point, I'm going to move on. And again, if you have time, download the podcast version, and I will see you guys tomorrow. Okay, so now we're ready to do the education portion of our video. And we've been using the book Trading in the Zone by Mark Douglas. And we finished the first chapter, which was about the shift of mental analysis, and now we're talking about the lore of trading and how to overcome some of the dangers. And on last we spoke together, we talked about that what we love about trading is the freedom. We can trade when we want to. Heck, now with Forex, it's 24 hours a day trading, and you can plop yourself down at a seat and trade to your heart's desire. But the negative of that is that anybody can do it, which is great. Anybody can open an account, which is great. But there's no requirement. There's no criteria. There's no syllabus. There's no class that you have to take before you start trading. And so people get into this free realm, this free and creative world of trading, and lose money. We've all done it. I've done the follow someone strategy. I've done the emotional trading and lost money. And obviously for some of us, when we lose money is when we finally say, okay, I've got to learn how to do this right. And that's what Mark Douglas talks about, that anyone can trade, anyone can open an account, but everyone needs to recognize the mental adjustments that you need to make to be a successful trader. And what he's talking about is the internal mental structure that provides the trader with a great degree of balance. You have to understand that with every trade, you can make money, you can lose money, and you need balance to know that, I don't have to trade everything. I need to have a trade plan. I need to have a system in place to know exactly what I trade. I don't have to worry about missing a trade. I don't have to worry about being in the trade too long. I need to have a balance to understand that there are opportunities, and my opportunity will come each and every time that my system presents it for me. To operate effectively in the trading environment, we need rules and boundaries to guide our behavior. Again, a trade plan. We need something set forth so that we know what we're looking for, and when we see it, we're able to act upon what we see and make good decisions based upon our rules, our system, based upon our trade plan. When we don't, when we make emotional trades, enormous damage can happen, like losing all your money. And again, every time I've traded emotional, every time I traded based on, I don't want to miss this. I want to jump the gun. Every time I've lost money. Don't know about you, but that's what happened to me, and that's what forced me to learn more about trade plans and to develop my own. As always, The podcast has the full video, so you want to download that for that. Please continue to provide us feedback and more about trade plans. And we're just about done with our official why we should have trade plan article. A very good friend of mine we've dialogued for a while, and he's really put forth my thoughts, and it's just awesome what he wrote, and I can't wait to share for that. So thanks, Dean, for that. Trading on Risk, and I'll see you guys tomorrow.